We're a very large investor. We have about $200 billion in assets. And our investment thesis is really that we can manage this portfolio in a way that not only allows us to do well financially speaking, but also allows us to do good and have a positive impact. Well, setting up an impact investing program for such a large institutional investor has been a tremendously rewarding, sometimes daunting, and admittedly sometimes frustrating experience. But to be honest, it was a much smoother ride than one could have feared. And it's been a really good experience. We took a long time, almost a year and a half, from the first thought about impact investing to putting a strategy on paper that eventually got approved in a very formal way. And maybe we had the luxury to take that time, but I think that's what it takes, and investors need to be prepared to do their research, to learn about the space, and to define for themselves what it is they want to achieve. I think there were three things that were really critical to the success of this impact investing initiative at Zurich. I think the first one is buy-in by the top leadership of our organization, buy-in that it was possible to achieve impact through the types of investments that are relevant for us, that are relevant for an insurance investor such as Zurich. The second element that I think was absolutely critical was buy-in by the broader organization, because in the end, we need to find a home for all of these investments that we're making. They always end up sitting on a specific balance sheet, and someone has a responsibility for that balance sheet. So people need to buy into the notion of impact investing and the possibility to combine impact and return. And last but not least, it is critical to have dedicated resources that can help the broader team to source impact investing, to source impact investment opportunities, to assess impact investment opportunities, and really act as a resource to the broader investment organization. What makes the impact investing field so special is that it combines people that usually would not cross paths, whether it is foundations, philanthropists, high net worth individuals, private equity, development finance institutions, asset managers, and yes, institutional investors such as ourselves. I think this diversity is unique, and all these people are connected through a common desire to achieve impact. I think the GIIN is the only organization that brings together the full spectrum of all of these players to talk about how to advance this field of impact investing. So when I get asked by our peers, other institutional investors, why should we do impact investing? Well, my answer usually is ask yourself, why should you not do it? If you can generate a risk and return that fits your investment profile, and on top of it, you can generate a targeted and measurable positive impact, why would you not do that?